Welcome to our Markets Magnified podcast, where this week we focus on the state of play in Africa as President Donald Trump decides to scale back and forth on those tariffs of his. And for this discussion, I'm joined by ETM Analytics' co-head for Africa, Takutwa Ndawona. Tux, thank you very much for joining me. I mean, Trump has really just been the gift that keeps on giving, sparing no one, including every single state in Africa. They all got slapped. We all got slapped, I should say, with some or other tariff regime, including Lesotho. They were slapped with 50% tariff regime. I mean, it's a country within a country. It's this small on a map. And even they weren't spared in all of this. So when we look at this wide sweeping tariff regime across the continent, who's going to be the hardest hit?
Yeah, so Ilse-Marie, the so-called liberation tariffs threaten, economic stability across the continent. As we saw, they range from around 10 to 50%. And most of the countries that have been the hardest hit are those with the greater trade surplus with the US. And as you mentioned, countries such as Lesotho have a big surplus with the US, so they're kind of punished by that calculation, and hence they face higher tariffs. Whereas you have your other bigger countries such as Nigeria and Zambia, they face lower tariffs, but they have second round impacts, which they face second round effects from the tariffs. There are several measures that we use to try and determine which countries will be hardest hit, and one of them is the level of reserves and its import cover. So that basically shows that whether the country has sufficient reserves to withstand the current market stress we're seeing. And looking at it, the IMF recommends around 3 months of import cover as what is suitable. So according to one of the charts we did, we see countries such as Zimbabwe, Lesotho, and Ethiopia, like their import cover is ranging between 0.3 months to 0.9 to 0.9. So that means that they do not have the sufficient reserves to offset or absorb these shocks these tariff shocks that will weigh on their foreign exchange income.
I think it's also important to take a step back, perhaps, and just to describe the markets before the Trump administration came into office. I mean, the relatively high interest rates we saw in the more developing countries really just drained funding for these, I suppose, relatively riskier African states. So liquidity was already a problem. There was already a shortage in funds. And then came the Trump administration and they just tightened the screws.
Yeah, definitely. So they've just worsened it. I mean, as you said before, we came from a period where high interest rates were tightening liquidity. Then we had President Trump come in, and with the withdrawal of US aid to Africa, I mean, that's a significant source of liquidity. And now that's just been exacerbated by these tariffs. As you know, like the increase in tariffs will make African exports to the US more expensive. And what that does is directly affects foreign exchange earnings. And this is a critical source of liquidity for African countries who are reliant on US dollar inflows to pay critical imports, repayment of debt, and stabilize their countries. So in essence, these tariffs have just exacerbated that tight liquidity situation.
You mentioned earlier these secondary round effects. Now, I suppose when you look at what's happening in the oil market, it's a secondary, twice removed impact from the US tariffs, as we saw oil prices drop significantly for various reasons. This is pretty bad for countries like Nigeria and Angola and their effects and their inflows. We know that Nigeria is actually having to relook their entire budget because their budget was premised on a $75 per barrel average for the year, which they're now estimating 70 at best. And the thing is, these bearish oil prices, they're likely to stick around for the next 2 years. And I mean, these are fiscal concerns that I'm sure is playing out in the bond market as well.
Yeah, definitely. As you said, so you would think that with oil, copper, and critical minerals exempt from the tariff list, you'd think the likes of Nigeria, Angola, and Zambia would be shielded. But in actual fact, that global uncertainty and commodity price volatility has played out in their bond markets, because remember, these are commodity exporting countries, so they rely on, most of their foreign income from commodities. And what we saw in April was unprecedented. I mean, you'd need to go back to 2022 when there was a steep sell-off in African euro bonds and it locked out, most frontier markets from international capital markets. And we saw the likes of So but this past month, we saw the likes of Angola, Nigeria, and Zambian Eurobonds like sell off quite considerably. Angola was the hardest hit, and like for Angola, the collapse in the oil price hits hard in the sense
Yeah.
that there's an IMF study that's showing that for every $1 that oil averages below $70 a barrel, Angola faces a deficit of 152 million. Now you take the current oil price and that difference and work it out. That's a massive financing gap for Angola.
Yeah, no, it's big problems, and it's something that the African countries will have to navigate. How, as an African state, do you approach this? Because you have to be smart, and we are seeing three strategies play out at the moment. Because you can either decide to woo and align with the US, which we're seeing countries like Zimbabwe doing, for example, also the DRC, or you can choose to go the more China route, which is something that we see in Kenya with that Chinese loan coming through in the last couple of weeks, perhaps going more in that direction. And then you'll find countries that's trying to straddle the line, and that's South Africa for you. Okay, we're trying to keep ourselves happy within BRICS, but we're also heading out to Washington soon to kind of find a midway. So everyone is trying these different strategies, and I think there will be individual and unique solutions for each African state, but it's going to be up to their leaders to think smartly about this, to think about the future and what they have to leverage to get the best out of the state of play, what we're seeing in geopolitically happening between China and the US. So definitely interesting. It's going to be interesting to see how everyone decides to approach this. But how would you approach it as an African state?
Yeah, Elsa, so I think you've just summarized, one of the solutions to this problem. And I'll just like to add on to that. I think one of the other options we could look at is diversifying export markets. Africa could look to the likes of China, India, and the Middle East. I know with China last year, they exempted imports for 33 African countries. So that's a key opportunity there. You could also look at, strengthening trade integration via the African Continental Free Trade Agreement. We know that's been ongoing, but I think it's just the slow progress in this implementation of this African Continental Free Trade Agreement. The government could step in to support, these industries that are affected. However, fiscal constraints, especially for debt-stressed countries, will limit the impact or the extent to which, the government can mitigate the impact of these tariffs. And then African countries could leverage on critical minerals. As we know, Africa has a wide array of critical minerals such as cobalt and lithium, and these are critical for technologies and renewable energy. And we've seen the US and China compete for influence and market share in this regard. So I think African countries could use those resources as a negotiating tool. And we've already seen this with the likes of the DRC and Kenya, offering their mineral resource, critical minerals, to the US. So I think that could be something they could look to do as well.
You mentioned intercontinental trade. It's always that thorn for Africa, right? Because the infrastructure bottlenecks that we have within the African state, it just limits that dream every time. But perhaps this time around there will be some political will to move towards using more intercontinental trade and looking towards each other and within Africa to find the solutions as the tectonic geopolitical shifts continue to happen. Tux, I'm sure we're going to have a catch up in a couple of weeks again on this as Trump moves back and forth on his decisions with perhaps a completely different analysis. But thank you for joining me, and we will chat again soon.